All right. Welcome back to another episode of the Real Estate Investing Club. I hope you guys are having an absolutely fantastic day wherever you are and whatever your day you're listening to this on. As always, on this podcast, it is Friday, so bringing that Friday energy to you. I mentioned in the last episode that we have a little bit different setup here on the podcast because my family, we moved into a new house. The furnace immediately broke on us, and so we moved into grandma's house for the past couple of days, which means I don't have my podcasting equipment. But with real estate, we keep rolling because things always go wrong, and you can't let that hamper you. So we are moving forward with the podcast on my laptop, which is why the audio may sound a little different to you guys. In the background is quite different. So hope you guys don't mind that, but it's going to be a good episode because we have Michael Albaum with us on the show. He is a remote investor, engineer turned investor who has done pretty much everything: single family, condo, small multifamily, commercial, triple net. His focus is on small commercial multifamily value add, but he does this all remotely. So you guys out there who want to invest, maybe you live in one of those metros that it's really difficult to invest in. You live in San Jose, you live in New York City, one of those metros where buying a house, it costs $1 million and you want to invest somewhere else. You want to invest remotely. Maybe you want to do the van life like Michael has done himself and invest on the side. This is your episode. This is the one to be listening to. So I'm super excited to jump into this. Michael, thank you for hopping on the show.
Hey, Gabe, super excited to be here, man. Thanks again for having me. This is going to be a lot of fun.
Absolutely. I told you before we got on here, we always like starting with stories. We like to hear how people got to where they are. It sounds like you have a good one. You started out as an engineer and then you did the van life for a bit and invested on the side. I love to hear this story. So why don't you jump into it and tell us how you got here?
Totally. So I started, I think like so many of your listeners probably did. I went to school, I got good grades, I went and got a good job. I did all the things I was supposed to do and then got my first paycheck and was like, whoa, that's way less than my salary divided by 12 or 26. And so I was like, this isn't going to get me going where I want to go fast enough. So my dad gave me a copy of that book, Rich Dad, Poor Dad, that purple book that everybody knows and loves. And it just totally clicked for me, to be honest, because I was an engineer. I lived in spreadsheets. I understood numbers. I understood math. So I could totally wrap my head around going and buying a house, renting it out for more than the expenses were and making a little bit of money. So I did that at a young age. And when I got that first rent check, I was like, oh my gosh, I have just figured out the unlock. Lo and behold, I wasn't the first one to ever figure this out. So that first one really gave me the motivation to say, okay, I can do this. And I had this goal of doing it once a year for 10 years. And in 10 years, I'd have 10 properties. And that sounded like a good round number. So I did that twice, kind of on the year, and then quickly realized, because I was happened to be traveling for work all over the Western US, I was like, wait a minute. Look at all these other properties outside of California. They're way cheaper. That price to rent ratio was way stronger. I'm like, why don't I just go buy properties in a different place from where I live? And so I just was gobbling up properties as fast as I could. I was living well below my means. I had like 5 roommates, single dude, was doing the whole like college extended life kind of a thing. And I had work paying for most of my life. I had an awesome job. They paid for my internet, my cell phone, my travel, like all this great stuff. So I was spending very little money. So I was turbocharging my savings as fast as I could and putting everything I had available into these rental properties, and just started building momentum and started figuring out, okay, I can actually do this while working a full-time job. I'm able to qualify for loans easier, buying out of state where the numbers make more sense. I'm just going to run as hard as I can at this. And that's what I've been doing for like the last decade.
Nice. I love it. So why don't you take us back to that first deal that you did out of state?
Yeah. So,
Investing out of state can be scary because there's so many unknowns if you're not investing in your backyard. So how did you, I guess start with, how did you select your market? How did you decide where you're going to invest?
yeah. So it's funny. My family was actually in the midst of a 1031 exchange. We had some property in Southern California, some raw land that we were selling, wanted to 1031 exchange into something else. And so we found a market out in the Midwest that made sense for this 1031 exchange. And so because I come from the property insurance industry, this was like a new build a new build deal. So my dad sent me out there to go look at the thing and make sure that everything looked up to snuff. And so while I was there, I just started poking around the market and I found these duplexes that were bank owned that were for sale for super cheap and the rents were really strong. And I was scratching my head and I'm like, wait a minute, like this just makes total sense. The numbers are amazing. So I was out there physically already and started setting up meetings with property managers and agents and all the local folks that we would need to kind of build the team out there. And so I was able to double dip from a family investment perspective as well as get some personal stuff done. And that's kind of what started building the
What
mold.
market was that?
That was in St. Robert, Missouri, believe it or not. So
Missouri. Okay.
yeah, a town that I had never heard of, but I just started doing like learning about, okay, what makes this market tick? Why are people living here? What is the economic drivers of this particular market? And once I was able to get comfortable with that, I said, well, I'm on site doing all this stuff, but there's no reason I can't do it remotely. So I did that for the next deal. I happened to be on site again because work sent me out there, met people in person. But I was like, wait a minute, just do all this by picking up the phone and calling. I don't have to physically be there. So really, when I was investing in like 6 different markets across the country, it got to be too unwieldy. A buddy of mine was like, dude, go pick one or two and hammer it and watch what happens. It'll blow your mind. And so for that, I did that exclusively remotely, and it was a lot easier.
Yeah, I like how you kind of started out with building the team. You kind of landed in a market and you started out by talking to property managers, talking to the brokers in the area, because that really is what can set a remote investing career off quickly. If you're just starting out looking at properties and you don't have that foundation built, by the time you actually find the property you want to buy, things can get hairy quickly. So why did you decide to start with the team? I mean, how did you know? It sounds like you already kind of had a background in real estate, or what kind of prompted you to build the team first before starting looking at properties?
So it was kind of that very first deal that I did in Southern California. So I was connected with a property manager who was also an agent. And she
Hmm.
walked me through, okay, what the process is, how do you do this thing? And so I just had the experience and I said, okay, let me just take that and build off that and figure out, okay, if I can go find a property manager who is also an agent or vice versa, because I had that mold already. I said, okay, that's
Hmm.
great. I can leverage one person as opposed to having to go make 2 relationships. And so I was looking for that really intentionally, as
Hmm.
opposed to an agent who's only an agent who referred me to a property manager who then I got to go talk to, who then referred me to somebody else. So I love when I can double dip and kind of be efficient that way. The other reason I really like working with those types of folks, Gabe, is because the incentives are really well aligned. Like at the end of
Yeah.
the day, an agent gets paid when they close a deal, when you or I buy or sell a property. That's just facts, right? For good, better, or worse. Property manager gets paid when they collect rent and manage a property. Well, if that person is one and the same, I know that they're in it for the long haul with me. They're not going to want to sell me a dud because then they got to go manage the thing and they've just created a bunch of headaches for themselves. So I like when they're able to wear both hats and look at those properties under a different lens as opposed to just an agent or just as a property manager.
Yeah. Yeah, that makes a lot of sense. If your agent is looking down the road for you, then they're not going to be sending you duds. They're not going to be sending you properties that are in, you know, areas that have rampant property crime, and they're going to be looking out for your best interest because they know that they're going to be the ones that are actually managing this thing once it gets under contract.
Exactly.
I feel like that strategy would only work on the smaller multifamily side. Have you had this work on if you're looking for a large self-storage facility, a large multifamily complex, something like that? Because most brokers that I've talked with are not also property managers in the areas that they work.
Yes. Yes to your question. It has not worked for the bigger stuff with one asterisk, one caveat. So I was investing in a market and in the Midwest, a totally different market. And I was using this broker. I loved him. He's become a very good family friend of mine. And I didn't follow my own process in setting up the team beforehand. I said, I've done this 1,000 times. I'll worry about the property management down the road. And that came
Mm-hmm.
back to bite me in the butt big time. And so fast forward about a year, I just couldn't find a good property manager that was reliable, that could get stuff done. So I begged and pleaded with my agent to basically go form a property management business. And I was like, I'll be your client day one. And so it was kind of a unique set of circumstances, but he did that. And so in that instance, yes, he was my agent, he was my broker and my property manager. But I would say that's very uncommon and not going to be the norm.
That's funny. Earlier, you mentioned that you had spread yourself out thin. You had been investing in a lot of different areas, and then you decided to focus in. That kind of, I had that same experience on the self storage side. And I was just, I don't know, I was in like 6 states and I was just had all these facilities everywhere. And I could not handle it. I realized that there's a reason why people choose a market and double down on that market. So, what was your experience like going from owning in multiple states and then focusing in on how many markets did you land on? One or two?
Uh, Technically it's two, but they're separated by a river and state line. So really it's one.
Yeah, got it. Which one is that?
Out in Covington, Kentucky, and Cincinnati,
Okay.
Ohio. Those are the two
Oh,
that are
okay.
separated by a river.
Yeah, yeah, great markets. How did you land on those markets?
Man, it's funny. Like I took what I learned from investing up till this point and just applied the same thing. And so I literally was on Zillow, and it's funny. I laugh at it because it's so non-scientific. But I back in the day, you used to be able to have the purple for rent and the red for sale filter on simultaneously. And so I literally
Oh,
plugged in a
I don't
hundred
even. That's
thousand.
funny. I don't remember
Yeah,
that.
yeah, yeah. Back in like the early iterations of Zillow. And so I turned on the $100,000 for sale and the $1,000 for rent. And I just saw
Ah,
like where all the clusters were. And
yeah,
again, like it's so funny looking back on it because it was so simple, but that's part of what I love about this is it's so repeatable. It's not technical, it's not scientific. Like it doesn't have to be hard. And so I
yeah.
just looked for where there was a lot of clustering and then just started doing some more research about, okay, well, Covington, Kentucky is never a market that I've heard of. I'm a California guy from LA. I live in the Bay Area. Like I was not familiar with it. So I
Mm,
had to go do some research. And I like to approach it in one of two ways. One is like at the market level. So learning about Covington, Kentucky, and then zooming in, deciding, okay, are there deals that I'm interested in? Or vice versa, kind of the way that I approach it is I said, okay, let's look at the deal level first. And okay, here's a bunch of deals that are in my price range that have good numbers. Now let's zoom out and learn about this particular market, Covington, Kentucky. So one of those is going to feel easier to folks. And I recommend starting that way. Some people like doing the market research. Some people like getting into the numbers first. And then so the more I learned about it, the more I was intrigued and said, okay, there's something going on here. Coupled with the fact that it's affordable and within my price range and the numbers work well. So I said, let's just go super deep into this particular market. And to your original question, Gabe, like, what was that like? Earth change, like life changing, earth shattering. Because I would make one phone call and get updates on six properties as opposed to having to make six phone calls for six different properties and chase down all these different things. And okay, when was that thing due? And okay, what was going on with that property? And it just became so overwhelming. So getting really laser focused was a huge change for my business and was allowed me to do so much more and be so much more efficient. So
yeah,
I would recommend it 10 times out of 10.
yeah. And that's really what it comes down to is how many people do you have to communicate with in order to manage your portfolio? If you are in a smaller area and you can have one property manager manage multiple properties, you don't have to have multiple meetings per month, per week. It really cuts down on the stress and the efficiency in your time. And so that makes a lot of sense to me. Um, so when you bought in Cincinnati and what was the other one? It was right across the street in
Covington.
Kentucky, Covington, Cincinnati and Covington. What was your criteria? What sizes were you looking for?
So it's funny, man. Like, so I was experienced, I'd done single through quad. That was what I had done to date. And so I was like, oh, I kind of want to go bigger. But it like the price was what was dictating the building size or the unit count. And so the first deal I bought out there was an 8 unit property for like $300,000. And I
Damn,
was like,
that's really cheap.
yeah, I'm like, this is insane. And so I was just looking at the numbers. I'm like, this doesn't make sense. Like, what am I missing here? Because it was my first experience going technically commercial, which is, as many of your listeners may know, it's 5 units or more. I was like, wait a minute. I thought these were like only for super rich people and like everyday individuals like myself couldn't buy these. And so I think the in-place rents were like 4 grand, 4,500, something like that. So 8 units, the rents weren't really strong on a per unit basis. But I'm like, wait a minute, like just the numbers made total sense. And so I took over, put in professional management. Today, I think the in-place rents are like 72, $7,300 a month. And
Oh,
so
that's great.
yeah, like I just saw this potential And so I started doing this value add without knowing what I was doing and without recognizing that it was value add. Just like truth be told, I kind of stumbled into this deal. I'm like, okay, well, that's about what I paid for a single family in Southern California. This is 8 times the units. So I have 1/8 of the vacancy risk. Like it just made total sense. And so I just started
Yeah.
doing that over and over again. And what I realized is at the time, I was buying like 5 to 10 unit buildings. That was kind of where I found my sweet spot. And I'm looking around and there's like just no competition. And so I'm sitting here scratching
Yeah,
my head.
that's the size where people between the 10 and I feel like the 30 really is where they're just not a lot of people look there because once people get into larger multifamily, they immediately want to go to 50 or 100 unit, you know,
Yes.
buildings. And so
Yes.
getting those smaller, I know 30 units is still, pretty big. Well, if you're looking at markets like Seattle and LA or San Jose or something like that, but it's really that is an area that not a lot of investors look at. And so there is great opportunity at the small-ish range for sure.
Yeah. The funny thing is, I'm looking around because I didn't know what I was doing. I'm like, wait, what am I missing? Like, I'm waiting for the other shoe to drop. And I think part of it was I was buying like distressed properties because I again kind of fell into this value add thing. So I think for a lot of investors that were targeting that size, they wanted something more turnkey. I'm like, I don't care. Like, give me the dirtiest, most rundown property. I'll figure out a way to make it work. That's what I did. Like, and it was awesome. It was a ton of work. I learned a ton of lessons, but it was awesome.
Well, let's talk about that piece because that is actually, when you're talking about remote investing, that is the hardest part. Setting up management, once you get the manager, it's not that difficult, but getting the rehab done and getting the property up to, livable condition, good condition, finding a contractor that you can trust not to steal your money or do a poor job, that is very difficult to do if you're not in the area. So how did you go about doing the value add, doing the rehab, getting the units turned, that kind of thing?
Yeah, so it's funny you mentioned that. Like, I got my money stolen a bunch of times by a bunch of different contractors because I don't know if you know this, but we're West Coast guys, so that automatically means we're billionaires with flush with cash. So that was the memo that these contractors got apparently. So it's challenging, and I relied really heavily on my property managers who were out there,
Yeah.
slash broker because they were one and the same at this point for the Cincinnati side of things. And so I just said, hey, who do you use? Who have you used? Who do you use in your property management business? Can they do this? And so there was a big learning curve on this. Like, I got my lunch eaten a couple times because of that fact. And so it's tough. Like, you're trying to balance all these things like cost and efficiency and reputation. Like, there are all these different variables that go into the mix when you're choosing a contractor. And so I was trying to go economical. And so I picked this contractor, and turns out they were stealing from me the whole
Yeah.
time. And
Never go with the lowest bid. I've learned that if you find somebody who's going to give you, do the work for 5,000, and another guy says 25,000, do not go with the 5,000. Just keep going. Look for other bids because if it's too low, that means this person does not give a shit, and they're either not going to do a good job or they're just going to straight up steal your money. So, yeah, do
yes,
not go with lower bids.
exactly. So once we got into a rhythm, we started kind of building that team, that Rolodex of contractors, whether they were just individual kind of sole proprietors or companies. Having done a couple of these value adds, like, we just figured out, okay, who do we call for what and when? And it started getting easier with time. But like, for
Yeah.
sure, the first one or two was like, holy crap, this is hard. This is hard. So and it's not for the faint of heart. Like, for sure, you got to be prepared for things to go sideways. You got to be prepared to lose money. You got to be prepared for things to come in over budget, if you're gonna play in that space. And so, again, talk about lessons learned. Those were some big hard ones. But at the end of the day, like, people always talk about real estate investing as kind of like getting a master's degree, except at the end you get a building as opposed to a piece of paper. So I'm like, all right, I went to the school of hard knocks. I went to life school, and came away with lessons and a physical structure to show for it. So all is well that ends well.
Absolutely. So let's fast forward a bit to today. So you got into these new markets, you started building your footprint, you started buying buildings. Where are you guys at today, and what's the future look like for the next 3 to 5 years for you?
Yeah. So did a bunch more projects out there. during the hype, during the pandemic, got into midterm and short-term rentals, converted like our old primaries, did a house hack. Like, so I've just kind of continued investing through all of it. And some wins, some losses, some base knocks, And I think, especially as you're getting involved in new asset classes and new strategies, you have to be prepared for that. I don't
Yep.
like clearly just because I'm a good value add multifamily investor does not make me a great short-term rental property chooser. And
Yep.
so, I kind of jumped in when everyone else jumped in. I'm like, oh, this seems easy. All you got to do is buy a property and you make money. Awesome. Which is clearly not the case. So I learned some lessons there. And then recently, what I've been super focused on is I built out an online investor education academy because I said, there's just too many people out there who aren't taking advantage of real estate investing and who are maybe getting taken advantage of by these gurus and these great $30,000 courses and stuff. And I was like, nah, there's got to be a better way to get this information out there to folks and really look to help people who are trying to get started in real estate investing. So I built an education platform for a tech company back in the day. They since stopped operating that, and so I'm like, let me just go do this for myself. So it's called MyFi Academy. MYFI, and I'm just trying to get the word out there and help people get on board with real estate investing because I've seen how powerful it can be.
Awesome, man. I love it. Yeah, there's getting a good baseline education is so important just to have a framework to move forward with. I always say to people, don't stay there too long. It's very easy to do, analysis by, or what is an analysis paralysis?
Analysis
That thing is.
paralysis. Yep.
And yeah. And just get stuck in the numbers. But you definitely need to start at some kind of baseline educational level. So that's great that you guys you're offering that. Where can they go to get that again?
Yeah, so that's MyFi Academy, MYFI Academy.com.
Perfect. I will put that in the show notes. So if you guys want to get started, get this education going, all you have to do is click the little more in the description. It'll pull down that full description, and in there you can find those links. Right on, Michael. Well, that should wrap it up. As I said in the last episode, we are skipping the quick question round like we usually do because we don't have all the equipment and I don't have my notes. So now we're just going to end it with how to get in contact with you. You've given us a lot to think about. If people want to reach out, what's the best way for them to reach out?
Totally. Thanks, Gabe. So LinkedIn, Michael Albaum on LinkedIn, or on Instagram, I am MyFi Mike, MYFI Mike. Those are the two best places to find me. I'm also on Twitter, or X, which is never something I thought I'd say. I'm at Michael Albaum there. Would love to hear from any of your listeners to talk shop or answer any questions they might have.
Perfect. As I mentioned, I will put all those links in the show notes. So definitely click that and reach out to Mike. So that wraps it up, man. Thank you very much for hopping on the show.
My pleasure. Thanks again for having me. This is awesome, Gabe. Appreciate what you do.
Absolutely. For everybody who's with us today, thank you guys for showing up. You are the reason you do this. So if you guys have any questions, reach out to me, Gabe at realestateinvestingclub.com. If you guys want to support the show, just leave us a review or a comment or whatever on Apple, whatever you're listening to this on. Other than that, I hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode. Thank you.